Joining me right now at the Aspen Economic Strategy Group Forum, Neel Kashkari is here. He's the president, of course, of the Minneapolis Fed, and there is so much to talk to you about. I don't even know where you want to start, but maybe we would start with what's actually just happening even inside the Fed, because there's a new opening, and then there's all the talks about the Kevins and what that means. And I'm curious as to somebody who's on that board, what it feels like.
It's uncertain. I mean, there's a lot. The Fed's in the news for a lot of reasons outside of just economics. And so that can be a distraction. And so it's just a reminder, keep focusing on the data, keep focusing on our jobs. And that's what we have to do. And that's what we are doing.
OK, so rate path, of course, is the ultimate question that you guys have to solve.
Yep.
You know, the president calls Powell too late constantly. The numbers, by the way, now that they continue to get revised downward, I think there's a group of people who increasingly look at those numbers and say, maybe he is too late. What do you think?
Well, there's two categories of data that I'm focused on. There's a bunch of data that I know and that I've got confidence in, and there's data that I don't know and we're not going to know for a while. The data that I think we know is that the economy is slowing. Housing services inflation is gently declining. Non-housing services inflation is coming down. Wage growth is coming down. We've seen the jobs number, and consumer spending is cooling. All of that suggests the real underlying economy is slowing. I've got confidence that that is happening. The part that I don't have confidence yet is what are the ultimate effects of tariffs going to be on inflation? And what I'm realizing is we may not know the answer to that for quarters or a year or more. And that tells me, as one policymaker, I need to start leaning more on the data that I've got confidence in. The economy is slowing. And that means in the near term, it may become appropriate to start adjusting the federal funds rate.
If that's true, do you think you were wrong to hold off thus far?
No, I don't think so at all. I mean, I think the economy has held up remarkably well. I think these tariff shocks are unlike anything that we've seen in 100 years, virtually. And it's taken a while for businesses to try to process it, for policymakers to try to process it. And there's just been delays. And if you look at the average effective tariff that's being paid at the border, it's around 10%. It's been climbing now month after month. It's well short of the 16% headline rate. And so should we react as policymakers to the headlines, or should we react to what's actually affecting the economy? And that's what's making these judgments difficult.
We've been talking all morning about something interesting, which is why do you think companies have not taken up price in the way they did during the pandemic? Meaning, during the pandemic, companies took up price almost in advance of inflation that they thought was coming. With the tariffs this time, that has not been the case.
Well, I think it's a few different reasons. One is once there's a pandemic that everybody can see, and it's nobody's fault, it's just a terrible thing that's happening to all of us, it's easy to say, hey, it's not my fault. I think tariffs are more complicated. Are your competitors going to do it or not? You know, I was in Montana recently, a small business, she runs a small restaurant company. I said, how did you protect yourself against tariffs? She said in late January, she bought a year's worth of bamboo shoots from abroad and stored them to protect her and her customers from tariffs. It's remarkable that that happened at such a little company and at big companies. So that's also why we have not yet seen the full effects yet. People are working down these inventories.
And so when you say you're not going to know it, you 12 months, what do you think happens between now and the next 12 months?
Well, I think right now the economy is slowing, and I think that we're going to have to respond to that. As the inflation data starts to come up, we're seeing it now in core goods. But how high is that going to get? Is it going to spill over into other categories? And is it going to be persistent? We're not going to know the answer to that for a long time.
The other piece of this is whether you think that the tariffs are persistent, meaning whether you think they go up, they go down, they disappear. I mean, I think part of what the market is doing right now is, to some degree, discounting that the tariffs, at least as we know them today, stay that way.
Well, I'm assuming the tariffs will be persistent. Whether the tariff effects on inflation are persistent is the question that central bankers care a lot about. And that we're not going to know for a long time. And does it bleed over into inflation expectations? So the path that I think about, you know, I put down 2 rate cuts in my December last year, December summary of economic projections for 25. I maintained 2 in March. I maintained 2 in June. 2 still seems reasonable to me for this year.
Before the end of the year, so 2 more.
Potentially.
So 2.
But now we've got a lot of data to come in. But sitting here today, I could see 2 rate cuts this year. But if it turns out that tariffs are having a bigger effect on inflation and it's more persistent, we could do 1 or more rate cuts, and then we could pause. You know, if inflation really ticks up because of tariffs, we could even then raise again. The tariffs are just such an unknown right now, what they're ultimately going to do to the economy. I don't want to make any promises about the longer-term future.
Right. Becky's got a question back in New York. Becky.
Andrew, thanks. Neel, what you said, I'm just trying to put it all together, this idea that, okay, You're the second person this morning who says they've spoken with business people who really hoarded a lot of stuff, brought things in advance, so they haven't had to pass cost on to their customers yet because they're still working down that inventory. We heard the same thing from former Governor Sununu this morning. He's been talking to people about that. That makes you think that inflation could pick up. This idea of cutting rates and then turning around and raising them again later, I always thought you guys at the FOMC were really opposed to doing something like that because it looks like you made a mistake if you turn around and reverse course a month later.
I agree. I mean, this is what makes it difficult, Becky. I would love to not have to do that, but I'm realizing that these tariff effects are going to take a lot longer to really become clear. And if virtually all the other economic data is pointing to a cooling economy and a slowing economy, how long can we wait until the tariff effects become clear? That's just weighing on me right now. And so if the best of all the options is we make some adjustments and then we have to pause, or even then we have to reverse course, that might be better than just sitting here on hold until we get clarity on tariffs.
And, suddenly everybody knows what the BLS is. And I'm just wondering, did you take those numbers with a grain of salt? Have you been doing that for a while, the initial numbers? And did you know that the rates were 60% and it's snail mail? And I mean, if you can get a 240,000 job revision in 2 months, just out of the blue, that makes your job so much harder. And I don't know, it's like you're trying to stand on something and it's, you're on roller skates or something. The rug can just be pulled out from under you. And it makes it harder. I mean, something needs to be updated, no? And it's an important number. Well, it's what you use.
It's a very important number. It's a very important number to me and to my colleagues. But we knew all those things that you just said. We knew that there are big revisions. We knew that the survey response rates were going down. These are conversations that I have with my economists all the time. And that's why I look at a lot of other data sources, as do all my colleagues on the FOMC, to get an underlying view of where's the labor market going. If you want to look at supply and demand in any market, look at the price. The price of labor is wages, and wage growth is declining. It's been declining for some time. That tells me, yes, the labor market is cooling.